Okay, peeps, welcome back. So today we're going to be talking about LTCN BCHG ETCG and HZEN. Let's get it. So just so y'all know, we do still have our positions. We just released a video, which actually will be for today, but markets are closed tomorrow, so this video is going to be for tomorrow. You guys know how this works. But anyways, we still have our positions. We showed you what they were. Nothing's changed. There was a big drop on BCHG, which is not really surprising because the thing's basically just been going straight up for like a month. So anyways, let's get into it. So as you guys can see here on LTCN, we did point this out to you guys before that there is this massive, huge control bar here, this big red bar, the very last major capitulation candle. And as you guys can see, the volume bar just below that, how big that volume bar is, the only bar that we've ever seen that's actually been as big, if not bigger, is only two of them. There's this one right here, which was the rejection off of this support term resistance. And then there was this bigger candle here when we got this pullback into this trend line. But of course, the volume on the right side of the chart is picking up because, again, we're going into a bull market. The way it generally works is most people that are smart money or that are in crypto for the long term, they are buying over here while retail traders are typically buying over here. So there's not as many people in the markets when the markets are at lows because it's not interesting. You know, there's no gravy train. Things aren't popping off 1,000, 5,000, 10,000% in a single week or month. So a lot of these people, you know, they're in it for the immediate gratification. They lose interest very fast. So that's part of the reason why you see the volume just kind of slowly tapering off here and then just kind of pretty dead at the bottom here. But anybody that bought near these lows, you made quite a bit of money. As you guys know, we've already made like $5,000 or $6,000 from LTCN already, and we have not cashed out a second time yet. And we bought down here at like $5.50 a share, so not quite at the lows. But again, we didn't know about grayscale back in this area over here. So anyways, the control bar is still intact. If you look right to left, you guys can see that the wick rejection was pretty clean off of that, the top of that bar. And it's not the largest red candle, but in terms of, I mean, obviously you're going to have your bigger candles here because your bigger sell-off candles, because people are freaking out at this point. They're like, oh, it's just another pullback, right? And then it actually turns out to be a massive drop. And then people start freaking out and selling down at these levels or on the way down at a loss. That's usually how it goes. But the reason why this is known as a control bar is because basically it's very hard to get past. But once it does, then basically sky's the limit. That means that the bulls will take over control again. The bears no longer have control. And as a matter of fact, I suspect once we get past this red bar here where the top is basically $50, again, that's a major psychological level. I suspect once we get past that bar and close clean above it, there's probably going to be an epic short squeeze. Which means that we could be launching up to $100 to $135 in this resistance area pretty quickly. It might happen, I'm not going to say in just a couple of weeks, but I would say a couple of weeks is definitely a possibility. I mean, if you guys look at just the last couple of weeks that we've had, I mean, the move has been huge. So from the market open to the basically the high, not the market close, but from the low to the high here, it's been about 105% move. So huge move in just 2 weeks. I do not think it's out of the realm of possibility for that to happen once we get that short squeeze. So LTCN did close a little bit lower, which again is not surprising based on that control bar, and the $50 level is likely a very strong psychological resistance, as 100 will probably be. So overall, the candle is still green. It is still higher than this previous candle. That's all very good. EMA is still moving up. We're still above the support zone here. Nothing's really changed. Now, if we go to the daily time frame, you guys can see we got a pullback into this, and just a few days ago, a pullback into this 8 EMA here, or the yellow EMA, and then we had a bounce. So these previous 5 candles here cover the entire market session. So basically, we pretty much closed almost exactly where we opened, even though it doesn't look like that on the weekly. So not really much has happened in the last week, kind of up and down. Whether you guys took profit or not, that's up to you. We were thinking about it up here, but decided not to, and not a big deal. We're expecting it to go much higher. So But the thing I want to point out here to you guys is that LTCN has been almost perfectly riding this yellow EMA without dipping below it, except this basically one green candle right here. That was pretty much it for basically about since all the way back here in the end of February. And as you guys can see, the move has been absolutely monstrous. I think it's like nearly 300%, if I can get an accurate measure on this. Yeah, it's been a big move, so about 316%. So as long as we continue to ride this yellow EMA, things are going to look very, very good for LTCN going into the future. And very similar story on the 4-hour chart, except the difference is that it's been more consistently riding the blue EMAs. So every time we come back to the blue EMA or the 21, which is the median EMA, we've been getting a test of it pretty much since around the same time in February. So consistently just kind of bouncing off of it, and heading higher. So that's always good. So with that being said, where we could potentially pull back to if the 4-hour and the daily is to remain consistent would be roughly around $37.50. And if we go over to the daily here, roughly about $39. So basically $37 to $39, somewhere there. So the support below that is $22.90 to $27, but I suspect it's probably not going to pull back that far because we pretty much already had our retest right in here, and then we just kind of slammed straight to the upside. So if we measure from the 37-ish dollar level just to get back up to that wick high, you're talking about nearly 50%. Then to get back up to the resistance above that, 157 to 250% on that move. So still a lot of massive upside to come. The other thing to point out here is we did have a death cross on the RSI, but it does look like it's trending back up. So I would not exactly call that bearish divergence. As you guys can see, the RSI started moving down as the price moved down. That is not divergence. That's just things moving synonymously with each other. So now going over to BCHG. This one has come back and retested this resistance zone. We're going to find out next week if this turns into support or if we get a bigger drop down. At this point, we don't know yet, but it did not close below the resistance, so that is a good sign. Okay, and it did get a little tiny baby bounce off of the 8 EMA here, so that's also a good sign. That shows that there is some rejection by the bulls, basically saying, no, you're not going to go back below this level, and they're kind of, the bulls are defending this particular area right here. So very similar to LTCN. So you guys can see on BCHG on the daily, we've been bouncing pretty much almost perfectly off the yellow EMA with the exception of this one time down here. And if we go down to the 4-hourly chart, very similar to LTCN. So a lot of bouncing off of the blue EMA, but also the yellow EMA. So, it could go anywhere between $16.60 to, I'd say roughly about $19. We'll go back to the daily real quick. So yeah, $16.60, $17.50, $19, somewhere in there. That's possible. I mean, it's pretty much already around that $19 level anyways. But as for the macro moves here, because of the fact that we have not closed above this resistance on the weekly time frame, I would say it's still resistance. So with that being said, support's going to be down at 1025 to 1260. Resistance between 1815 to 2025. But again, I would say that the likelihood that this thing is going to go back down to the support is still pretty small at this point. We would need to see some continuation to the downside to be convinced that this thing is indeed going to go lower. I mean, again, we don't have any confirmation of that yet. We don't even have a single close below the resistance level with a red candle yet. So there is no clear confirmation that this thing is going to have a big pullback. So to do the measured move from the current support zone, it'd be about 61 to 78%. Now, if we go over here to the daily time frame, we'll just use this one as an example. If we were just to say it pulls back into, like, I don't know, maybe 1650 or so, the move would not be that big. So it'd be about 10 to 21%. But this would be one of these situations where it might be good to DCA in instead of just aping in everything you have, which I wouldn't, not financial advice, but we would never do that. We're not just going to throw everything in there like, a lottery ticket and be like, oh yeah, it's going to go to the moon. There's no guarantee, guys. So the move up from that point could be relatively small, not huge, from right around these EMAs. But if it goes down further and you're DCAing in, you're going to be glad you DCA'd in, because then you can reduce your cost basis, which kind of gets it closer to the support, which then again on the flip side, when it goes back up, gives you much greater profit. So HZEN, we're going to go over to the weekly time frame here. So not really much going on in HZEN. It's still kind of chopping around, deciding what it wants to do. It's in this flag pattern. Once again, the flag pattern target is roughly about $14.50 a share. And we're currently testing this resistance and support, but no definitive move yet. So I would say that the support's likely going to be anywhere from $6.90 to about $8, and then your resistance is going to be $11.25 to about $12.40 or so. It's also possible it may not even go below this trend line. So the trend line's at $7.50. That's also a possibility. I'm not going to say it's not going to go below the trend line. It's possible, but we just don't yet know. I mean, it's been in this flag pattern for almost a month. So if we measure it from basically the middle of the zone to the next zone, it'd be about 49 to 64%, and then all the way up to that flag target's about 92% profit. So GXLM still kind of in this pennant or bull flag pattern here. Again, the target is way up here at $90 pretty much. So we did have a close above this support, which indicates a breakout. Now we're retesting. But we have not had a larger green candle kind of up here yet, pushing into this resistance. So still kind of in the retesting phase. I'll have to keep an eye out on this one and see what happens. But current support is between 52.60 to 58.20. Current resistance $75 to about $96. And then that target, of course, is at $90. So if you decided you wanted to get in now, which is up to you, you'd be looking at about 27 to 54% to potentially all the way up to about 61%. So ETH-E, this one is very much still kind of just chopping down and sideways. As you guys know, last week, the stock market kind of dumped off a little bit. The CTAs, I believe, is what they're referred to. They're like some kind of automatic computers that that sells off the market. It's complicated to explain, but it's something that I believe Wall Street uses, and like the stock exchanges and stuff like that. They have these computers that have like trading algorithms that decide when the right time to buy and sell is. So that's kind of what happened last week, and as a result, crypto got kind of smashed a little bit. So not really surprised that we had a sell-off here. But anyways, the cup and handle target, as you guys know, is all the way up here at 54.30. This is the handle portion here. We haven't had a breakdown or breakout yet of it, so we don't know if this pattern is actually going to be confirmed or not. But one thing to note is we did actually have a candle close below this resistance turn support, so that would I would say that's pretty bearish. However, we are still above the EMAs. We are still in the handles, so it's not fully confirmed yet. If we get outside of this handle and close below it, I would say that's very bearish and could be moving down to about the $17 to $18 range. So if I was going to pick this up, I'd pick it up somewhere between 17 to pretty much where the price is now. I'd just DCA down if it was me. So if you guys want to wait to get to this zone, that's up to you. So getting back up to support from there is about 38% to 64%, and then 128% to 168% to the next resistance, and then all the way up to that target, assuming this plays out like I think it's going to, is going to be about 100 or 205%. And if you guys take a look over here on the right, you can see a lot of these dumped off on Fridays. So pick your poison. It might not be a bad idea to maybe consider, not financial advice, but to consider getting ready to start loading the boat on these things. So this resistance here on Zcash did not hold. This actually is not a bull pennant. What it actually turned out to be apparently was a rising wedge. So that's obviously a bearish pattern. Target is the bottom of the wedge. Reason I called it a bull flag is because we have this huge green candle here. In order to have a flag, you have to have a pole. That's the pole. But we have the confirmed breakdown. So It's possible this thing could go back down to the top of the support at $5. I would not discount it. So 440 to about $5.15 a share. Just to give you guys an idea of how big that drop would be, you're looking at probably about 23%. So not a huge drop, but 23% of $1,000 is $230. Keep that in mind. So the support down here again is between 440 to about 510. Current resistance 7.25 to about 8.25 or so. And then the resistance above that is going to be about 14 to 17. Zoom out here so you guys can see it. This basically bear market swing high here is the reason why that's a resistance zone. Again, that would be a control point for the bears at some point in the future when the bulls are trying to push past that area. So assuming you guys waited to get in down here, you'd be looking at about 53 to 69%, and then 193.5% to about 256% to get all the way back up to $17. And of course, I mean, you don't have to wait to get into the zone. You could just DCA down, and the lower it goes, the more aggressive you can buy. There is people that do that. They basically scale in and out of the markets depending on what it does. Like, let's say if I had $100 a day to invest and I wanted to buy at this zone, but I didn't want to put it all in at this zone in case it goes lower. Basically, I could say like, okay, for every dollar, I'm going to put in $20 a day now. And for every dollar it goes lower, I'm going to add another $20 a day. So it gets to $6.50, I put in $40 a day. $5.50, I put in $60 a day, and so on and so on. You guys kind of see my point here. So that's Zcash. So GSOL, once again, this thing is still very indecisive. It could go up, could go down. We don't know at this point. But the one thing I do want to point out here, if I really zoom out here, you guys can see that this red candle close is lower than these two previous red candles. And this green candle here, that's generally a bearish sign. When we see something like that in our day trading and it closes below an EMA simultaneously, we typically expect a much bigger drop, and usually it does happen. So how far exactly it goes down is anybody's guess. Could be as little as 34%, could be as great as 47 to about 55%. But hey, keep in mind, if it does drop and you're willing to be patient and wait, you could get a serious discount here. And if it does go back up pretty quickly, like say SoundHound did, for example, I mean, the gains could just be like legendary. So I would say if I was going to buy this, I would not buy unless it got to this zone. So about $175 to $200. Again, because the risk of the drop is huge. Of course, you could pick the accelerated DCA strategy that I just mentioned on Zcash with this one if you guys wanted to. But from that zone to get back to the peak here, be about a 202% gain. So pretty good gain on that one. Mana still stuck in this triangle pattern, not up, not down. Once again, the red candle here is lower than the green candle. That's a bearish sign. That's not good. But we are still above the EMA, still above the zone. EMA is the zone, and this channel here are all kind of sitting in the same area. So if it is going to stop and rebound from somewhere, I expect it'll do it somewhere in the zone. So the zone itself is between 1730 to about 2030-ish. And the top here, this target here, just so you guys know, would be for the triangle if it does break bullish, but we haven't seen that yet. So the top here is roughly about $70. So if we do the measured move from the zone to the wick high, you'd be looking at about 278%. I'm sure a lot of us would be very happy with that kind of return. So GBAT, this one, again, I will point out here, this red candle is lower than this previous candle here. And we've had 3 weekly red candles in a row. That is a pretty bearish sign, if you ask me. Does it mean it has to go down? No. It just increases the probability that it is going to go down. But there's no guarantees. So I think if this thing drops, it's probably going to stop somewhere at the top of these candles here. That's just my opinion. So it's about a 51% drop. Why do I say this? Because the candle peaks, or the tops here, that's kind of where so basically we had this like trend line going down. Once we broke out of it, we moved up massively, but this resistance here would be turned into support, which technically already has kind of been tested with this green candle wick here and even this wick over here. It's pretty close to that area. Plus we have the EMAs here, generally in that roughly about that area, and also the support below that. So that's roughly about $9.5. The support below that is $4.50 to $5. And the top up here is about $32. So this is for basic attention token, just so y'all know. If you guys don't know what that is, the browser that we're using is known as the Brave browser. That basically is the browser that that the token uses, the basic attention token. So we are actually using their browser, believe it or not. So anyways, the move from there to the top would be about 235%. Now, if you got lucky and you got down here at the zone, I mean, yeah, the gains would just be absolutely nuts. So 575% move on that one. That's pretty huge. G-Link, again, very indecisive. We have not seen a bearish or bullish confirmation on this yet, but do note that the top of these wicks here, all of these wicks, this one, this one, this one, this one, which have kind of tested around the top of the zone, and the EMAs are all kind of sitting there. So I suspect it's probably going to stop somewhere around here. Maybe it goes down here. We'll just have to wait and see. But the current support is $67 to about $84. Support below that is going to be about 38, roughly $39 to about 45.5. And the top of this thing is going to be about $220 a share. So if you manage to get your average into the zone somewhere, you'd be looking at a pretty large gain. So let me actually remeasure this. So about 190%. But if it went back down into this lower zone here at about $40, I mean, the gain would be way bigger. It'd be about 433%. So something to keep in mind. PHLG, that's a very flat candle. It literally did nothing last week. That's weird. Okay, so there is no clear direction here on PHLG. Nothing that really can be said about the probability of which way it's going to go. The only thing I can point out to you guys is that there is possibly a divergence going on here. So as you guys can see, the RSI is going up and RSI is going down and the MACD is going up. That is bearish divergence. If that is to play out, that means that there is a drop coming. But again, that just increases the probability. There's no guarantee. So if it stops at a level, I suspect it's probably going to stop somewhere around probably maybe about 67 to, I'd say, $86, somewhere in there. So the peak is at just shy of $400. This support down here is roughly about the $39 level. So if you got in somewhere around the top of these candles down here, you'd be looking at pretty huge gain, so about 441%. But if it drops even lower than that and you manage to get in this little tiny green box here, it'd be a huge gain. It's over 800%, so 830%. That's a really good return. GLIV, this thing is very indecisive, very bullish and bearish at the same time. These candle wicks are just crazy. So once again, if this thing does pull back, I suspect it's probably going to stop somewhere around 26 to 28 bucks. These wicks here are buying pressure. That's what that is, which indicates when it got to this level, somebody was interested in buying this. And clearly somebody with a lot of money was interested in buying this, because you guys can see on the volume on the left there, basically way up here, you guys can see when I hover over that candle, 32,500 shares traded and 11,000 shares traded. So a lot of kind of battling going on between the bulls and the bears there. So this is a critical level right here, around 26, 28 bucks. So there's that. And then the top is at $80. If you manage to get in at that low there, let me remeasure that. That was kind of sloppy. So you'd be looking at roughly about 185%. And the support below that is about 12 to 15 bucks. So anyways, this is what's going on with the Grayscale Trust as of the market close of yesterday on Friday. Hope you all enjoyed this content. Please like, comment, and subscribe, and we'll see y'all later. Peace.